Welcome back to Reform Millennials, a podcast where we discuss the intersection of markets, politics, and pop culture. Please remember that the content of this show is for educational and entertainment purposes only. Nothing should be considered financial or tax advice. Please consult a professional before you make any investment decisions.
Good morning or afternoon, Joel. How are you?
I'm really good, thank you. How are you?
Doing well. Can't believe we're at the end of April already. It never ends.
No, time just marches on.
Hmm.
And we delayed a day because there were so many Bank of Canada, Federal Reserve, the federal government having a lot of releases, which I think was important for us to touch on, especially given just how loud the world is at the moment.
Correct.
So before we touch on the economic update from Carney and the Federal Reserve / Bank of Canada rate holds, I wanted to go through this little market lay of the land, and then we can move on from there. So over the last 6 weeks, we've seen a major market re-rate. We went from there's a war in Iran, oil prices are going to 200, Brent in some cases, real purchases in Asia we're touching on $170. That story hasn't actually gone anywhere. The strait has been closed for the better part of 6-7 weeks. There seems to be a new extension of their negotiation every 2 days. And yet the S&P 500 just yesterday or the day prior to yesterday, Monday, hit new all-time highs. All while WTI was 92 over 100, Brent trading well above 110. And I think most pessimists, most people felt as though that was going to be improbable to impossible. The idea that this cost would be passed on and would be realized in the price of food, fuel, etc., would cause major issues from a consumer pricing perspective, pessimism, etc. Mm-hmm. Just yesterday, Visa reported its best transactions quarter in its history, going and flying in the face of this pessimistic view. A lot of folks who have been anti whatever happens in America have effectively said that this war had no plan, it had no justifiable reasoning, and no outcome that could possibly be good. And while that may or may not be true, equity markets price is telling us otherwise. It is looking straight through this as being what would be to the point in which they feel as though oil prices will resume back to $70, $80, and the consumer won't be impacted and will continue on. So this has obviously emboldened the president. It makes him feel comfortable going into his soon-to-be meeting or conversation with China's Xi, and I believe sort of shocked a certain section or sector of the political ideology. And this isn't me supporting anything. It's just me telling listeners and viewers that the world is dynamic. The economy and market is dynamic. Oil can find new ways to transition. And we are going through, undeniably at this point, in my opinion, one of the most consequential technological transitions and geopolitical transitions of our lifetime. And that isn't to be taken lightly. And I say that with like, I think, some force, because if you're not paying attention to how the world is reorganizing, you're going to miss out. And if you just rest on your laurels and your past understanding of how the world works, you will let the entire world will pass you by. Now, I do think that this is and will have a lot of negative implications, like any massive change does. But what I want to hammer home for listeners and people that have been paying attention to us for a long time is that if you are not watching, paying attention, and then learning to how to adapt to this technology transition, it's going to be very painful. I'm going to post something in the newsletter that I think paints a picture of what happened to the economy, to employment, to the professional class, and even just the agriculture class back in the 1850s through to the 1890s. And I hope too that people can then extend off of that and perhaps project off that what could happen to them and our current social class or professional class if they don't also adapt. And all of this to me is going to be very politically volatile. There was a podcast that I listened to late last week, and the co-host mentioned that he felt that the one thing no one was pricing in yet was that there is going to be mass protests in the United States. And that isn't going to be for anything that has traditionally been a hot button issue. It's going to be in protest against artificial intelligence. The Bernie Sanders cabal of people that have, I think, riled themselves up into this fear state are going to be in the streets protesting artificial intelligence. And this is there's an ideological gap between those that are heading straight on into this technology, learning it, using it, and figuring out how to leverage it, and those that are calling it, and I think effectively suggesting that this is a doomsday scenario and wanting to regulate it to death and or just have it go away altogether. And when you think about economic actors, those that participate, and who ends up benefiting from these things over long periods of time, anything back in history, those that have screamed for regulation to remove something, has it ever worked? I'm just going to answer that as rhetorical. No. The only way to deal with economic change, technological change, is to learn and adapt. Because unfortunately, the world that we live in does not have the net or the social net capable of taking care of you. We live in a competitive and dynamic world, one where what people want wins. And if you look at the current consumption and economic outcomes that we're seeing in every quarterly earnings, it is very, very clear the majority are demanding more and more of this technology, and it's growing at such an incredible rate that the best, most dynamic companies on the planet are spending hundreds of billions of dollars to use it, build it, and prepare themselves. So individual actors need to do the exact same. Right now, and I'm gonna paint through a few or talk about a few items that have just recently printed. You had Taiwan Semiconductor, the largest semiconductor manufacturer fab on the planet, raise their full year 2026 revenue guide by 30%. They intend on adding additional capex to building out leading edge fabs, which will produce the GPUs required to build out the next 3 stages of our large language models / leading lab / Mag 7 companies' semiconductor infrastructure. That is a big tell. The often very, I think, reserved CEO said the shift from generative AI and query mode, when you open up your app and you throw in a request or you ask it a question, has officially shifted. This CEO has for 20 years talked about, or rather never makes a forward-looking statement about their customer. They almost always say, we don't even care what our customer uses these chips for, so long as they continue to buy. We're indifferent to the technology. All we do is produce the leading edge. He is now suggesting that query mode is now shifting to agentic AI and command and action mode is leading to another step up in the amount of tokens being consumed. Tokens being when you prompt an LLM or a model, you have to spend a certain amount of tokens. A token or two, or a couple hundred tokens, is equal to a couple letters. And then the production, the result of that query has its own token production, usually a multiple of that prompt. That is how they're measuring from a monetary perspective the production of these LLMs and then the cost that's associated with that. He's suggesting that there has been a step function, a exponential growth in token demand and production, which means that there's now been an acceleration based on the advancements in this technology of just how impactful and how much it's being used and how much it can actually accomplish and do. They have acknowledged that. A company that has long never given a dang about the underlying technology, they have said, we need to change how we are building our business, because if we don't, others will, and they will take their position. How has that impacted the rest of the world? Well, Intel, the company long thought as being completely and utterly dead, has now reemerged and is up well over 150% this year. I don't know if anyone remembers, but the United States government bought 10% of that last year. It's up from, I think, their investment at $22 a share, today trading at 94. Not bad for old Donnie T. The reality is that this business has been resurrected because of the step function capabilities in these large language models. The fact that they're able to produce an incredible amount of value for these businesses. AI is very real, and it's converting into revenue and sales. If that isn't enough signal for you, tonight and tomorrow night, you're going to get the 5 largest companies on earth signaling how they view the market. And I think it's very important for people to pay attention to that. So Mel, without going any further, I think that kind of shows you where the market is, how people are thinking, at least in North America. What I would like to get your take on is the most recent economic update, and then we can kind of move on from there.
Yeah, so yesterday, so that would have been Tuesday, April 28th, we had the Carney government release their spring economic statement. Now, for those wondering, we usually don't have spring economic statements. Usually we have sometimes like a fall economic statement. But we know that since Carney came into office, he has committed to introducing budgets in the fall rather than traditionally in the spring, to give Canadians a bit of a head start on what they can expect in the fiscal year. So our fiscal years are still April 1st to March 31st, but we do see just this shifting in timing of when we introduce budgets. And so we see the spring economic statement give us a little bit of an overview on what was going on in 25-26, as well as, what we're sort of expecting in 26-27. So we, in the sort of top line numbers, the projected deficit that we see for 25-26 is about $66.9 billion. So that's $11.5 billion lower than what was projected in budget 2025. We see this budget decline over the period till 2030 to 2031. One of the other things that they do note in the update is the fact that the mix of the deficit is going to be increasingly more towards capital versus operational. This is another commitment that Carney brought in, basically saying that they are not going to run deficit budgets on an operational basis. The deficits that they do run will be investing in capital. And so they are saying that will be the case by 28-29, is that those capital investments will account for 100% of the deficit. So there's different opinions on that. We can get into that after the update. We do see that revenues are about $7.2 billion per year higher on average than previous budget projections. Some of that, no doubt, due to energy prices as well. And we see on the sort of performance of the economy on real GDP growth, those numbers are still not great. They are relatively good when you look at some of the other nations in the G7, but we're looking at sort of 1.1% growth, real GDP growth in 2026 and about 1.9 in 2027. That is, again, higher than a lot of G7 countries, but lower than the US, which is hovering, I think, around 2 or 2.1% in their growth projections. So again, the government will market this update by boasting about the fact that it's the second fastest growing G7 economy. When we look at that in relative terms, that's perhaps good, but objectively not great growth prospects. And we can get into talking about how energy plays into that as well. I would say that when we look at inflation, of course, inflation is looking like it's going to be a little bit higher at 2.5%. Again, we see a lot of this being driven by energy prices, but also, I work with some nonprofits, and a good chunk of that inflation is also due to food inflation as well. And we could probably do a whole episode on the economics of food inflation in Canada and have a really robust discussion. So I would say those are sort of the high level takeaways. The day before they released the update on April 28th, they introduced a new fund, which I think we're going to get into, the Canada Strong Fund. And so that's been driving a lot of the discussion happening in the update as well. So I would say nothing, the too long didn't read version of this, nothing in the update is particularly crazy out of what we would have been expecting, except, of course, this new Canada Strong Fund, which we can absolutely get into talking about. I know you and I have some different opinions on that, and we'll get into a robust discussion. But again, slightly lower deficit, but nothing that I'm looking at from what we saw in the fall and saying this is just so fundamentally different outside the Canada Strong Fund.
Yeah, the Canada Strong Fund is a hot topic in at work. Everyone has their opinions. I mean, we're located in Alberta, so it's biased one direction for sure. But I've held my opinion on this fund, or I didn't want to say something specifically until I got more information about what the board would look like, and the way in which the incentives would be structured, what its return, or rather investment policy statement was going to be. What were the goals of the fund itself, and how would they be crafted? Now, if it comes out that the investment policy, the intentions of this fund are to be ideological and tied to and in line with the Liberal government's ideologies, I might flip a lid. If you were to find
get ready
comparable,
to flip that lid, Joel, because government doesn't do anything in a nonpartisan way ever.
Well, in Denmark they do. Wow. When you look at comparables of sovereign wealth funds,
their sovereign wealth fund is actually based on wealth. Sorry, I'm already getting started with my annoyance. I'll let you finish.
So government does. Ours in Canada, okay, maybe not. However, the equivalence, the global equivalence of sovereign wealth funds, whether it be Saudi Arabia, Qatar, Norway, which everybody and their dog loves to talk about, whether they be Alberta separatists or even just Eastern Canadian liberal voters, always find that to be like the North Star for all sovereign wealth and what we should be doing with our revenue generated from resource. If this becomes a fund that is just another way to redistribute budget to make it look like it's an asset versus a liability, to then continue to spend on ideological beliefs, we've lost the plot and we've failed. We've effectively given a politician who is, I think, rightfully, this is a good classification, an incredibly good politician from the go-ahead to do absolutely nothing different, but just do some incredible accounting magic. I completely agree with people, but I have not yet seen that as being a promise. And if this is focused on return on invested capital, invest in opportunity, I believe that borrowing money at 2.5, 3, and then deploying it and returning 12 is a good idea. And it sure as heck is better than the lion's share of the investments our national or federal government has made in the last 20 years. So if that is the intent of revenue generation, I'm all for it. I think that this is a good idea. Not only that, I believe in a national aligning investment process. I like the idea that you can invest in Canada and there being benefits. I think all of those things are drastically better than many of the alternatives, whether that be massive housing grants in the form of demand side support. Now, where I know you and I are going to take this is going to be, this is just a continued financial engineering to provide capital to get some of this ideology and shovels in the ground to support it. And it really truly is just a solution to the symptom instead of taking care of the illness. And go ahead.
Yeah. And part of the problem that I have is that, yes, I'm not going to disagree with you. Among all government intervention centered policy levers that a government can pull on, this is not the worst option to come up with. But my concern in Canada is that we seem to literally only look at policy levers from the government and evaluate those and forget that in a world where we allow markets and companies to be regulated, but not in such a way that they are not able to grow, you actually don't need this level of government intervention. And so, yes, I agree with you in the context of what is a solution that is palatable. When you're only looking at government solutions, it's not the worst thing in the world. And I'm not going to sit here and say, oh, it's the worst type of government action. I think where I get just so frustrated is like, this is not government action that would have been needed if for the past 10 to 12 years, we didn't actively try to stymie and hinder every existing opportunity that we had. I look and not to totally hate on the government here, but I do think it is worth just unpacking some of this. If you go to the Canada Strong Fund website on the Government of Canada, it says a clear mission. Okay, investing to have a fund that belongs to all Canadians. Okay, well, when you look at the energy sector, most of our natural resources already do belong to all Canadians, and people and companies who cultivate those resources pay royalties, which Canadians do benefit from. Canadians don't benefit from those royalties if we block the ability to cultivate and explore those resources. The endowment, just to give you a sense, they're putting $25 billion over 3 years on a cash basis into this fund. Just to give you a sense, in Alberta alone, I think it was in 2024 when we had high oil prices, bitumen royalties alone were $17 billion to the government of Alberta. Now, I know I'm playing apples and oranges because these are different levels of governments, but that's the level of wealth that comes in that is not taxpayer dollars to our governments. It is royalty money when we allow the responsible extraction and use of our resources. And that's not even to say of all the other natural resources. We're just looking at bitumen royalties.
FYI, that's more tax paid than our big banks pay.
That's more tax paid than our big banks pay. That's more tax. I think that's more in Alberta, at least. That's more than CIT, all CIT combined provincially. And I believe also more than PIT as well. So again, we have a source of revenue that's stable and available to us that didn't have to be paid for by the taxpayers that we continue to neglect. The fact that in their website, they also have to say it's an investment strategy that emphasizes returns. I'm sorry, I'm unaware of an investment strategy that wouldn't emphasize returns. Like I think that Canada has gotten into
I can name multiple. They were in the majority of our economic updates for the last 10 or 12 years.
So anyway. Again, like this is where I get a little bit frustrated because it seems like, the writing on the wall is that when it comes to developing large projects in the energy sector and otherwise, but large capital projects that the government wants to have a seat at the table on, industry and organizations who have to go through these processes have been screaming from the rooftop for the past 10 years that this is a regulatory issue, not a capital or investment issue. It's become a capital and investment issue because of the regulatory uncertainty, but it is not the fact that energy companies or banks or otherwise have no capital to deploy. It's that they are choosing not to deploy it in Canada because they are not certain or certain enough that when they deploy it in this country, that it will result in the intended benefit. And now I am not sitting here saying that for energy projects, there should be just green light everything, no environmental assessments, nothing. But we have to admit that the thing that needs fixing in this country is the regulatory environment and the process that we go through. I also just want to say as well, like maybe this is an obtuse way of looking at it, but taxpayers already have an avenue to participate in the upside of Canada's natural resources. They receive a benefit of that through royalties, and they can also buy stocks in the companies that are building these projects. And you don't have to be a multimillionaire to be able to do that either. And so I have a real issue with government coming in to save the day with addressing short-term issues that they have created and creating systemic further long-term problems. And where I think we can get enchanted by these things is like Carney is absolutely saying all of the right things and he sounds great. And I actually do think that he wants to do something about our growth problem, but we continue to deny the realities. Like if we look at our oil extraction, our non-conventional oil extraction industry, the labor productivity in that industry alone is $580 an hour, which is 10 times the rest of the economy. We have this opportunity, this golden goose, I think you wrote in our notes, and we continue to pretend like we don't have a solution to this problem, and it is right there. And that's my opinion on it. I don't want to be just like a hater on the fund itself, and I would be more supportive of it if we didn't have other solutions that we haven't basically rendered unable to pursue because of our regulatory environment.
Mm-hmm. I could not agree more. The opportunities are fairly obvious. Not only that, they know about them. We've had the largest CEOs across the entire industry lobby for these changes, and they've effectively been ignored for the better part of 2 decades. And I'm not sure we're going to see a change. I'm, again, giving them till August. And I'll change my tune if they do, but if they don't, I'll also update. But I also want to touch on a few additional things that I think are relevant. 25 billion is kind of a drop in the bucket. That's about I don't know, depending on who you're looking at, 1/30th of Elon Musk's net worth ish.
And by the way, it's smaller than Alberta's current balance in the Alberta Heritage Savings Trust Fund as well.
It's effectively a great storyline and a great name, an exercise in political marketing that perhaps was meant to endear this government to Albertan voters or conservative voters. But at the end of the day, the economics and the sizing and the incentives, again, I need to see them make sense for this to be something I can get on board with and support. And I think that when you relatively compare this to other projects, the cost of those projects, et cetera, for the longest time, the government that is building this plan has long said that there's no economic case for X. You had just laid out the reasoning why expanding our pipeline capacity, export capacity, is such an important part of the balance sheet of the Alberta government and the federal government. The business case is screaming at us. And if we then dive further into this artificial intelligence build out, I'm developing portfolios and models right now that is looking at stocks that are up 300, 400, 500, 1100%. Companies that produce energy, solve energy bottlenecks, the people that are building these data centers that are costing per gigawatt $40 billion each, servicing companies that are demanding an additional 25 gigawatts of power by 2033 times 2. These companies are going through the roof and they're paying astronomical prices. The demand for energy is just from a growth perspective, is just starting. We have the opportunity to do something about this. We have the opportunity to change the look of our current fiscal budget, provincially and nationally, if we get out of the way. This is not rocket science. This is a technological revolution. And if we don't start coming up with solutions, real solutions, we are going to be going through another decade of darkness. So where I'd like to transition this to is to a few little Canadian tidbits that I want to discuss, because I think they kind of are flying under the radar, and maybe I'm wrong. I'm not in enough rooms, but just over the weekend, Rogers decided that it was going to drop its CapEx by 30% and that they were going to offer a voluntary departure package to 10,000 of its employees. Now, I think what's happened over the last decade, 15 years, is numbers and size have just, the big tech industry has completely fried my brain. When I hear about capital expenditure programs from Canadian companies, I'm just like, well, that's peanuts. Just look at what's happening at Amazon and at Microsoft. However, when you look at Rogers, it's one of the biggest employers in the country. And 10,000 employees, while we're seeing cuts like that in the United States happen all the time, for people that don't know this, Rogers has, I think, roughly between 23 and 25,000 employees. That's 40% of one of the largest companies in the country offering their employees a way out, a package. That is, if that doesn't send a message, I don't know what does. Who is going to replace? And if you don't think that this is also going to happen at TELUS and at Bell, come on. Of course it is. This is just a tale of what is to come. This is what AI and the advancement is doing to these businesses. They are seeing that the incentives and the capabilities are justified, or rather, they are now justified in making these cuts because of the advancements in these capabilities. The infrastructure is being built. 10,000 people no longer paying taxes are going to have to find a new place of employment or retire. We need to replace that. We need to get on our horse and transition and learn how to and build. If we don't, unemployment is going to be rabid, and we're going to go through a very similar period to what occurred to every economy during the 1850s to the 1890s, during the Industrial Revolution. And a couple weeks ago, probably right after we had recorded our last episode, Mel, I read this article called Ender's Pause from Fabricated Knowledge. Fabricated Knowledge, his name's Dan, but he works for SemiAnalysis, which is the largest AI infrastructure financial analytics company in the world. They're growing faster than effectively every business in that industry. And he wrote this piece that was a really beautiful read. I quite enjoyed it, but it effectively compared the current AI situation to, or we'll call it advancement, to the Industrial Revolution. And in doing that, he laid out a scenario where during the 1780s to 1840s, not 1840s to 1850s or 1890s. I keep mixing up the railway boom with the Industrial Revolution. But rather 1780 to the 1840s, we saw per capita GDP grow 46%. Now, this growth, I think, is going to be exactly what occurs during this AI revolution. Why? Because companies, as we're starting to see right now are seeing real improvement in economic outcomes. There is an acceleration of revenue, sales, and efficiencies gained because of this technology.
Mm-hmm.
And during this period of time, you actually saw working class wages grow 12%. Again, back 1780s, 1840s. In that time, one of the largest, or rather highest paid sectors of that industry was referred to as a hand loom weaver. And I would equate that to today's software engineer. Software engineers, whether or not you're paying attention to this space or not, the amount of jobs open here is actually starting to expand and grow.
Mm-hmm.
Because there's such an incredible economic outcome tied to more engineers. Same to this same thing happened to hand loom weavers back in the 1780s. Capital was reinvested in more capital. Returns to labor started to stall. This occurred over the 60-year period, similar to that of the railroad revolution. Now, what ends up occurring here is you start to see an improvement in standard of living. But you also have with that a displacement of one of the best employment opportunities that existed prior to this revolution. So right now, what's driven the US workforce, what's driven the technology industry has been the professions in that class, that software engineer class. I would even argue that the professional class. I think if we look at some of the labor statistics in the United States, for management professional related occupations, it's roughly 44% of the US workforce. And if you start adding in office and admin support, that's 100 million of the 161 million employed people. And interestingly, this is also the richest and most valuable cohort of any modern economy. Now, if you start to add this new dynamic in, and I mentioned earlier in this podcast, like the economic or monetary price tied to a prompt in a large language model as being tokens. Companies today are currently balancing a specific type of math, and it is, I have a $120,000 employee, or for the exact same, if not even slightly improved outcome, I could spend between $10,000 and $25,000 a year in tokens, effectively employing this new agent or this AI. That is this new augmented productivity. That is going to be a dynamic that starts to, I think, seep into our political and cultural lives, but also you'll start to see it in markets and the underlying companies either being destroyed by this or taking advantage of it. So
this is a whole new type of tokenism in our workplaces that we are not prepared for to deal with.
No, we are not. Yeah. And Canada just got its first taste with the Rogers layoffs. I think most people in this province this country and people listening to this podcast have dealt with one of the large communication companies in Canada. When you talk to somebody there, are you talking to a human or are you talking to an AI? Everybody knows the answer to that. Just times that by about 10 because it's coming. So what are we to do about this? I think everybody should go and read that post. The most impressive thing about humans is that we always are capable of adapting. This is why we have not gone extinct. Also, I would add that there's this famous quote from Morgan Housel, or at least I'm making it famous. The world has always been ending, and this sounds like it's ending, but yet here we are. And the reality is that the future jobs of our children will not be the same as today and or the last 10 years. And that has been true for generations. Now, while I work in and operate in like the second oldest industry on earth, I also recognize that my job or jobs like mine are going to be disrupted and that this is going to come at a cost. And I need to be very dynamic in my thinking and my positioning. That is true for everybody and I would argue probably closer to 60% of the economy. So this is almost a kind of a call, please heed my warning. This stuff is coming. It's coming for our jobs. We need to get better at dealing with it. And the canary in the coal mine is this Rogers release. It's coming for us. So we need to figure out how to best prepare ourselves.
I hear you, Joel, and I think that some of what our issue is as a society in unpacking and understanding these things is we think that the presence of scarcity is the same thing as the presence of fear or lack. And I think it's really important to distinguish between the two. Capitalist systems and really any form of advanced democracy requires a level of scarcity in terms of choices, trade-offs, understanding the consequences of our actions. Scarcity is not inherently a bad thing. It actually forces us to optimize our decisions. We all face scarcity in time. We have a finite amount of time. We have a finite amount of resources. And those constraints are good for us. They help us drive, or should help us drive, to the best possible outcomes, whether it's with time or capital or otherwise. And I think that sometimes we have, I don't know if it's through just the way that our sort of Overton window has changed over the year, or just the vibes or the sort of social culture and fabric of our societies, but we have, I think, grown to resent or hate scarcity and be fearful of it and have a sort of lack mindset about a lot of these things. And I think that has driven this fear that you're talking about in people. But I think it's not the fact that we have to make choices, it's how we view the choices that we are making. Like if we are looking at those choices through a negative lens and only seeing the downside to them, like to your point, if we are looking at these rapid changes and only seeing the downside and not the opportunity, to me, that is more of a lack and fear-based mentality than it is a scarcity mindset. Like I think we have to be realistic about the changes that are happening and be able to objectively say, okay, like this is going to create less of this and more of this, and there are going to be people who are impacted. But again, it's just, you're not pretending that the facts don't exist. You're looking at the facts through a different lens. And I really appreciate that you are encouraging us all to be more positive about that, because again, like we've talked about this before, everybody, if you're going to live on Earth, has to deal with and confront scarcity and these changes. And so it's a matter of who you want to be and how you want to show up to those questions. And I do think that there's incredible opportunity as well for people who aren't like the bourgeoisie or owners of resources either, because of the accessibility of these things. So I appreciate you drawing the attention there, but I think there's no doubt there's going to be shifts, and there's no doubt that those shifts are going to be hard. I just think and this is part of why I, on the policy side, have such a hard time with the paternalism of government coming in to save everybody all the time, is like we are reaching a point where government is literally not going to be able to save us from this. The revolution and the changes that are happening right now are bigger than any government. And so if we are only able to rely on government through policies or wealth redistribution to help us, like that's not going to be an option anymore. And if that is the only muscle that we've flexed, a lot of us who have depended on that, well, I wouldn't include myself in that per se, but if that is your avenue and preferred method of support versus the private sector and the abundance that is inherent in a market economy, it's going to be tough for you. So I think that's perhaps the biggest argument in favor of embracing these things versus fighting them.
I think that's really aptly put. I really like the idea of scarcity. I thought scarcity often is the fuel that drives innovation and adaptation. So I'm optimistic. I do truly believe that human beings are just the most dynamic beings on Earth, and that's the reason why we are the center of the universe. As much as people don't like to hear that, or perhaps push back against that. Now, let's transition a little bit from negative sum to something that could be negative, but let's try to be positive some about this. The geopolitical USMCA NAFTA situation. or at least I think we both have been of the opinion that the Iranian situation and war has been about more than just nuclear fuel. I think that that's a nice excuse. I believe that it is partially true, similar to that of the strategy that Donald Trump has laid for a number of his tariff policies. Back in 2023-4, when Donald Trump was running for office and Pierre and Carney were going head to head, he had effectively signaled he was going to take over Canada. To a lesser extent, he was going to drastically increase tariffs. SCOTUS struck down the legal basis of his ability to do those things, and he's now pivoted to 10% global tariff. I think it's in Section 122, and 50% on aluminum, steel, and copper. Just as soon as April and May has come this year, so too will the July 1st deadline for our extended USMCA. And that to me is what I'm going to be paying a lot of attention to. It's been very loud elsewhere. I think that similar to Donald Trump's excuse to going to the Middle East and to I think strategically taking out specific oil wealthy nations is positioning himself so he has some leverage in his upcoming meeting with President Xi in, I believe 2 weeks. It's the Trump-Xi summit. This has strengthened the American position. As many people likely know, China imports a large majority of its energy. While, don't get me wrong, they have the most dynamic energy industry in the world. They've been adding more solar and more wind and more nuclear than any other country on the planet. However, it's a lot of people to feed, and they still import an enormous amount of energy. Now, the United States is a net exporter. This most recent rise in oil prices has been a net benefit factor, not to Trump's political position, but to the economic position of the United States. Now, you then couple that with the positioning with Xi and the most recent commentary from Prime Minister Carney and his newfound relationships and continued admiration for the Chinese and Europe. And we're coming to a point. We got 60-ish days, 65 days until this, we'll call it trade agreement, rolls over. What exactly is going to happen? This deadline is real. I think it's pretty clear if you just listen to Donald Trump, he wants 2 bilateral deals, with one with Mexico, one with Canada. What are we to do? How is Canada? I understand what Carney is positioning himself for, and I've long felt that this was him filling his trade negotiation gun. But are we really going to go down this road? Are we really going to sever ties with our largest trading partner?
Well, I think it's interesting what you said. I don't actually agree that it is at its base that Trump wants 2 deals, just objectively. I think right now he does, because I think that he sees that as the way to sort of exercise power and display his leverage with Canada. But I actually don't think that Trump wouldn't negotiate equally with Canada and the US if he felt like there was a pathway to do so. So I don't think that he just for the sake of it wants 2 separate deals. I think that he sees the way that Canada has continued to position itself, juxtapositioning it with the United States, its closer relationship with China, the choice geopolitical decision that it's made about some of the things happening in the Middle East. And I think that for Trump, there's obviously this economic and geopolitical calculation that he is making, a security calculation as well. But it's interesting enough as well, because I do think that there's a values calculation happening on the part of President Trump as well. And I think that the U.S. is perhaps not as excited to be in bed with China in the ways that Carney has expressed a sort of willingness to. And I mean, we talked about this a couple of podcasts ago, so I won't get too much into it, but I think we should really be mindful of the ways in which we are allowing and sweeping pretty impactful geopolitical actions that the Carney government is taking that help domestic political questions and considerations and what the long-term impacts would be. I think we are in a place right now where we have to look at the short-term needs as well as the long-term needs simultaneously and make sure that we're not sacrificing the short-term for the long-term. I see Carney with a little bit of a willingness to do that when it comes to some of the USMCA stuff. It really depends on what's going to happen, really depends on what the Carney government believes its upside is. The Carney government clearly believes that there's been a rupture, that the relationship is not the same, and they believe that they can foster relationships with Europe and China and others in a way that is going to possibly displace the relationship that we have with the United States, or at least create sort of a credible threat that the US tries to negotiate with them in good faith. I think that's a huge risk to be taking. If we look at Canada's exports right now, I mean, Canada exports such a significant part of our GDP. 1/3 of our GDP is tied to exports, and 75% of those exports go to the United States. So I'm open to the argument that we could possibly displace some of that trade with the United States. But again, majority of that trade is energy, and we refuse to build pipelines and infrastructure projects that would help offset some of that in a way that private sector comes to the table. And so again, the math isn't mathing for me in terms of how we're going to fill that void. I'm sort of unaware of another industry where there's as much upside as there is from the energy sector. And so I'm confused a little bit as to how the Carney government believes they'll fill that gap, if they do think they can fill that gap. So again, I mean, we were talking before we pressed record, you have to tell people about your leverage, you don't have it. And so I don't know what Carney thinks about this. And I get nervous if he's not nervous, because that to me means that possibly Canada is okay with a country like China having its foot on the neck of the United States. And I don't like that personally. So that's what I think about that.
I agree with your statements pretty well across the board. Now, the thing is, the rest emotionally, the country is not in agreement. I know you probably talk to plenty of folks that are upset. They probably view the government south as being intolerable, like to the point in which the man running the country is the least digestible human being ever to them. And they view the United States as being fundamentally different than theirs. And so who would they rather align with? And I think if you were to ask 40 million Canadians, would you rather align with the Chinese government, or would you rather align with the US government? I would be hard pressed to say that the majority would say they want to align with the United States at this point.
And that is, pardon my French, effing scary to me.
I agreed. I think it is the biggest risk to Canadian longevity and the Canadian standard of living. And I would argue that the worst part about Donald Trump is this result, what has happened in Canada. And I understand where people are coming from. I get it.
Same.
To an extent. I cannot fathom how they can make such a wide or such an impactful decision because of their disdain for a man who is going to be gone in 2.5 years. Mm-hmm. They're going to make a decision that will impact their kids' lives, their kids' lives, over a politician who is going to be gone in 2.5 years.
When are the next elections in China?
Never. When Xi dies. Wouldn't we like to adopt their politics, Mel?
I just forgot when their next election was. Thanks for reminding me.
Okay. Yes. He just recently got reinstated for life. These are things that make me scared a little bit. It's really hard to balance two things at once, which is I've never been more excited about the economic possibilities of tomorrow, while also juggling this dire situation federally and in Canada. And I don't know. I'm ever an optimist. I do think we're going to come out of this ahead and for the better. It's just politics moves so slow, while the world moves at just a pace in which is disturbingly fast. And luckily on my day-to-day, like from a day-to-day basis, or my operations day-to-day, are to focus on what's working and where the money's going. And I don't have to pay attention to what's moving slowly. If I didn't, I might lose my mind a bit.
Yeah, I do feel that politics is moving, like there's almost like a flooding the zone thing happening lately. And it's like this illusion of fast movement, but actually slow movement. So yeah, it is. I was saying to you before we press record, and even at the beginning, already the end of April, it feels crazy. But yeah, I mean, I think, again, let's just continue to take what we have, do what we can, and do the best that we can. And I think that applies for politics, that applies for investing, and that just applies for everyday life as well. And I think that we can make a difference by those small actions. And I believe that. And I think that even if that's not true, I don't want to know it's true. I want to live, speaking of Havel, I want to live within that lie, because life is just better when you can be optimistic.
Completely agree. There's a saying that from Morgan Housel, that optimists make money and pessimists sound smart and optimists make money. And if you were to bet on the end of the world, why do you want to be rich and dead?
Exactly. Like,
what's the point
of it?
Or
do you want to be happy? I want to be happy.
Personally, I don't like the idea of being right about the end of Canada and being right about this. It's not fun to me, so I'd rather work towards the positive and to the upside. And that's where I choose to spend my time. So Mel, again, thank you so much for everything that you do and for preparing and chatting with me this week. It's much appreciated.
Awesome. Talk to you soon, Joel.
Take care. That's all for today. Thanks for listening. If you found this valuable, please subscribe and share it with a friend. As always, the information on this podcast is for educational purposes only and should not be considered financial and/or tax advice. Please consult a licensed professional for your own personal situation. Joel is a registered portfolio manager and investment advisor, and clients of his and his firm may own securities discussed on this podcast.